What's going on, everybody? My name is Chaz. I'm fired up right now. I have Christine McNerney from Periscope Capital. So, you guys, if you don't know Christine, it's because you just don't know SPACs that well. She is one of the most popular people in the SPAC ecosystem. Christine, welcome. How are you today?
I'm good, thank you. How are you?
Living the dream. Life is well. So, okay, first of all, I have to give you some props and let everybody know. If you've known Christine for a while, you probably know her as the assistant portfolio manager for Periscope, but she's big time now. She's leveled up. Christine, congratulations. You are now the portfolio manager for Periscope Capital.
Yes, and I will asterisk it. I have a co-PM. We do it together, but yes,
We
we are
really know
now.
who's wearing the high heels. Come on.
That is fair. That is fair. I am definitely the only one in the heels on the team, so I'll take that.
Right on, right on. So, okay, starting off, just tell us a little bit about you and about Periscope and what you bring to the SPAC ecosystem that a private company that's looking to do a DSPAC would be concerned with.
Yeah, so Periscope is a Toronto-based fund. We have a multi-strat that has a big focus in SPACs, and we've been active in the SPAC market for over 10 years now. So if you have done a SPAC or if you have done a D-SPAC, you have probably come across us. I focus on the SPAC teams, the sponsor teams that are doing the IPOs, but then I also meet with everybody on the back end. So I'll meet with the target teams and when they're matched with their sponsors, and they'll kind of present their investment to me, and we'll do some back and forth and give some feedback. And I'll probably be one of the earlier institutional investors that DSPAC teams will meet with before they hit the public markets.
That's huge. And specifically, I'm excited to hear some of that feedback that you typically find yourselves kind of giving. So we'll dive into that here in just a little bit. But before we even do that, I want to find out from you, like before we talk about feedback when they're at the end of the process,
Mhm.
what do you think as somebody who like you're deploying capital, like you're literally the person who they care about so deeply because at the end of the transaction, it's about what is in the trust, what capital do they have to go execute their strategy and their vision that they have now that they're going to be a public company. And that's where you come in. So, in your eyes as an investor, what makes a good candidate for a SPAC transaction?
It's funny you say that, they're using the capital to execute their strategy because that is one of the key things that I look for. And you'd be surprised to know that that's not a given with every team. I think for some people, doing an IPO, going public, like that's the end game. They want to be the CEO of a public company, and it's a bit of an ego thing. And that's always a bit of a red flag for me. I want to know, what are you going to do with this capital that you get? Is it going to be helping you execute some portion of your long-term strategic plan, whether that's product expansion or maybe it's M&A, maybe you're expanding into a new geography. You're going to take that capital and use it well, not just put it in your pocket and go parading around and say that I'm the CEO of a public company. It's got to be about more than just your ego.
Okay, so I'm not going to even lie to you. My part of me says, you know what? A CEO of a public company, they got to have a little ego and a little bit of swagger because, I mean, you're going to have people trying to knock you down a peg day after day after day. So you got to have a little confidence in yourself.
Mhm.
But at the same time, how often do you see that to where literally that's just the end game of we want to be public?
I mean, I will frequently sit with a team and say, okay, so what do you need the capital for? And they'll say, well, we don't. I don't need capital. I have all the capital I need. I'm great. I was like, well, then why are you doing this? Because, there's a lot of stuff that comes with being a public company. Like it's not the same as being a private company, only now you're just talking to new people. It's like there's a lot more reporting requirements and eyeballs on you. So, you know, don't do it unless you need that money and you're going to use it for something that's going to help benefit the investors that are giving you the money. I don't want it to sit in your bank account while you twiddle your thumbs and pat yourself on the back. It's you're in the big leagues now, so
So
I
what
want you to
about the
succeed.
people? What about, because I've seen this before. We don't need the money. We just want the marketing and the visibility and the notoriety that comes with a listing. When they say that to you, does that still that doesn't cut it for the investor? You
So,
want to
I
know that
mean,
they're gonna take the money and run and do something great.
I want you to do something great with the money, but I do
Mm.
understand that element of being a public company. Um, You know, you need to have a plan in place for doing that, though. A lot of DSPACs, they go public and they kind of languish a little bit. So make sure that you have a good strategy to actually be getting yourself in front of the institutional investors and telling your story over and over and over again.
I know I know somebody who they went public, and then the CEO went to Japan for a month to play every major golf course in Japan. That was
See,
their like
this is
that.
not what I
That's
want to
not what you're
see.
jamming with. That's not what you're looking for, right?
No.
So for some reason,
But
that was like a thing for them. They wanted to play every golf course in Japan. I was like, that's a first. I haven't heard that one, but okay.
no, I'm sure it was great. I'm sure they had a lovely trip.
I bet they did, and I bet that there was some business expenses happening there. So,
Yes.
okay, let's keep on this because, like, I want to talk about some of the signals to where a company maybe they're not ready to be a D-SPAC target. Like, what are some of the things where you're like, hey, no, these guys they need to contend with this toxicity, or they still need to level up their game a little bit. They're not there, they're not ready. Like, what are some of those things?
I mean, there have been plenty of D-SPACs where I think that the company is in very early stages. I think that you need to have some operating history behind you, not just, I have a patent for a cool product. Like, that's a little bit too early stage for me to get very excited about it. I will say, and I've said this before, if you're feeling down about the world, you need to go look at DSPAC target companies because so many of them are solving these amazing, like these big problems, and they're solving them in these amazing and creative ways. So, I think that that always hits an interesting niche where it's like, I don't know, data centers are a big issue right now, or like space debris, things that, or
Yeah.
like lots of biotech things where it's like, these DSPAC companies have interesting solutions to these problems and they're bringing those to the market. And that gets me quite excited.
I love that. Do you realize that I think you're my 43rd podcast, and out of all of that, you're the first person to speak with such like optimism about saying, look at all of these companies that are because they don't fit in the typical IPO box and they're
Hmm.
doing these and out of the box remarkable creative things and like just saying like you're having a rainy day. Look at these guys that are doing remarkable stuff. Kudos. I love that. I love that.
Honestly,
Okay.
it gets me excited about the industry and about the world. And, to the earlier point of something that's very early stage, like I don't want to discourage anybody that has this good idea, but you need to run with it a bit before you hit the public markets. Get some private financing, get a little bit of experience under your belt, then hit the public markets, and I'm sure that you'll succeed in that regard, but you gotta run with it a bit on your own first.
So, okay, I 100% agreed. 100%. So talk to me a little bit more. Like, you said that they're just not really ready because they need to get some more legs under them. What else?
So sometimes I'll meet with companies that are extremely experienced in the industry in which they're operating. So, maybe let's go back to biotech. They're, scientists and they're geniuses, but that doesn't mean that they are the right presenters for the public market. So I think that you need to have a really good critical eye on your management team and say, do we have somebody in place that can take our story and translate it to the public markets, talk
Yeah.
to the institutional investors, bridge that gap. You need that team in place to really help transition you into the IPO route.
I think that's so well said. I see time and time again to where you've got the guy with so many letters after his name, the gal
Mhm.
with so many letters after her name, and then you look at their pitch deck and it's literally like 50 pages long.
Mhm.
And you're just like, no,
Yeah.
no,
And it's
nobody
like
wants to
50
listen
pages
to
of
you that long.
science.
If you can't explain it to a child, like you need to be able to do this concisely. And if
Mhm.
you can't even do that, then how in the world are you going to lead a team, execute, inspire people, cast vision, and be able to make decisions without having paralysis of analysis and get stuff moving? So
Mhm.
I think that that's really critical. And so if you're listening right now and you happen to be a private company looking to go public, considering a DSPAC, if you fit into that page to where you want to build a 50-page deck for a pitch deck, like I want you to think if you're that person, bare minimum, you need a consultant. Bare minimum. And if that isn't even enough, that consultant may actually tell you that like if they truly respect you and want to do their job excellent, don't be insulted if they tell you that you should bring in a CEO and then you sit in as chairman, something of
Mhm.
that nature. And you should be okay with that because if your passion is to really scale the company, don't be the thing that gets in the way of it.
Yeah. I,
So
I would also say it's something that the sponsor team should be able to help with. If you are
yeah,
partnering with a sponsor team that wants to actually have you succeed, not just get a deal done, they should help you bridge the gap between where you are and what they know investors want to see. So they should be helpful in that regard if you've partnered with the right sponsor team.
I 100% agree with that. In fact, um, I know that I have a philosophy of I don't need to find a perfect company to do a deal with. My
Mhm.
philosophy is find a company that's maybe a 7.5 or an 8 out of 10, but then you have a team that's able to step in there and you pick them up at the value of a 7.8 or like a 7.5 or an 8, but then what you bring to it, you're able to rapidly deploy some tools that turn them into a 9, 9.5, maybe a 10, and
Mhm.
you've got that instant valuation bump that's there to where the stock can perform better whenever it's in front of people like Periscope and So so true.
Yeah.
Why such a wise sage. That's why you got the promotion. I get it. I get it.
Yeah.
So what
I mean,
else?
and realistically, then like that's what SPACs were designed to do. Like you should be looking at it as opposed to a more traditional way IPO as a way to partner with the sponsor team that's going to help bring, new things to your team. So maybe they can help you suss out your management team and say, we're missing X, Y, and Z. Maybe they have institutional relationships that they can introduce you to. You know, maybe they have connections in the industry in which you operate so they can help expand. But I mean, that's why you are doing a SPAC as opposed to a more traditional IPO so that you get the chance to partner with the right sponsor team that can really lift you up and grow your company into what it really ultimately can be.
By the way, speaking of lifting someone up and speaking into them, I actually want to derail the conversation for a moment, and I want to say thank you for something.
Okay.
At the SPAC conference this year, you and I ended up in a conversation over by the Churchwell Insurance Agency booth. And I did not even know that apparently my face was on the screen on the main stage because there was a Jeopardy competition that was happening
Was.
on the stage. And I end up finding out that apparently I was on there valued at $100. And I was like, dang. I was the intro guy, like the cheap one. That sucks. But it was category was bald men and SPACs. And like, I mean, I own it. Whatever, I'm follically challenged. It is what it is. But but I was bummed about it. And you were like, Chaz, don't you realize that the $100, that's the one that's the layup. It's the easy answer that everybody knows. And I was
Yeah.
like, oh, thanks.
You
You're
don't
like,
want
you
to
made
give me a
me,
$1,000 one. That means they don't think anybody's going to know who he is, and
you
nobody
were
did.
like, you're the only one that people got. And I
Yeah.
was like, oh, okay, now I feel good. Okay, it's nice to at least be known.
Well, I'm
So
glad to have helped.
no, it was an uplifting moment. I appreciate it. And I say that because I want private companies to know that whenever you end up across the table from them or when you end up on a Zoom with them and that moment comes, like you actually really are insightful. There's just a lot that you're going to bring to the conversation, and I know sometimes you may end up saying things that might be some hard truths,
Yeah.
and so I just want to encourage anybody whenever they do end up across the table from you or on the screen with you to take it with as a teachable moment and with a bit of humility because you're not new at this. You've been crushing it for a long time, and there's a lot of value in what you have to say. So
Yeah.
wanted to
I
throw
mean,
that out there.
yeah, us at Periscope, like we really care about the SPAC ecosystem as a whole, which means that when individual teams come to me, I want to see them succeed. And, every setback, every DSPAC that does poorly, it's a drag on the SPAC market as a whole. It's going to stop really strong target companies from wanting to go public via DSPAC. So we want to see everybody
Yeah.
succeed. If I'm giving feedback, it's because I'm trying to be helpful. I never do it in a mean way. So, I'm trying to help everybody get pushed forward.
So here's a crazy thing because you actually talked about like really caring. And so I know that whenever you get involved, that you have a propensity to spend a lot of time with any of those targets that you do get involved with. And so like I want to know whenever you look at a D-SPAC target, what makes you say that's a company that we want to spend time with?
Yeah, and I mean, realistically, I'll come across a lot of DSPAC companies, and as much as I'd like to, I can't spend a ton of time on all of them.
Yeah.
So, one of the first things I look at is like, is this a compelling story? Is it solving an interesting problem? Is it something that's going to go out into the world and get people fired up? That's kind of point one. Am I excited when I hear about this?
I
And
love
sometimes,
getting fired up.
yeah, like, and it'll be something that maybe I've never heard of before, never considered before, but I'm just like, oh my God, that is the coolest thing. I need to spend some time with these people. I also, when I speak to the teams, I want to hear them tell me their story. I want to hear that they are fired up about it, that the sponsor team's fired up about it, but also that they're being realistic.
Yeah.
Sometimes I'll talk to a team and they'll tell me, okay, we have these revenue projections for the next 2 or 3 years, and in order to hit them, we need perfection, 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 perfection. And it's like that gets me nervous. Like that's just we're not in a world where everything goes perfect and then you get your revenues. Like there's going to be some setbacks, and I need to know that you are realistically looking at things so that if these setbacks happen, you're not going to be just completely thrown by it and you can't handle it and now the company goes belly up because we just couldn't manage that. So, are you being realistic about what you're doing, what it's going to look like, what being public is going to look like? And, overall, it's just a back and forth. You tell me about your company. I'm going to give you feedback about how I think that myself and other investors are going to perceive it. And then you can do what you want with that information. You
Are
can
there
use
any
it or you
red
can
flags?
throw it
Oh,
away.
so, like, tell me this, like, whenever you start talking to these companies and you're trying to figure out if you want to invest with them,
Mhm.
I mean, I know we kind of alluded to a couple of things earlier, but are there any things to where if a leadership team is listening to this right now and they're considering doing a DSPAC, to where they would want to take an inventory of themselves
Yeah.
as you answer this,
Mhm.
are there anything whenever you have that conversation with the leadership to where they'll say certain things and they're red flags for you?
I mean, one of the red flags that I'll have is a lack of consistency. I might meet with a team 3 times, and then they'll tell me 3 different stories with 3 different projections. And it's like, guys, like, let's get this ironed down before we get out to investors. So that always makes me a little bit nervous. Meeting with them 5 times and the valuations changed 5 times. Like, there's frequently valuation reassessments. That's fine, but it probably shouldn't be a ton of times. And then also just do kind of an internal audit. Everybody talks about audited financials, which is a given. Like, you better have your audited financials. But do you also have, an investor relations team? Do you have governance metrics in place? Do you have those types of things that institutional investors are going to start looking for that a lot of private companies don't have? So start putting those plans in place, start executing on that element of your overall program before you hit the public markets.
Yes. In fact, again, if you're a private company that's actually looking to go and go public, SPAC, IPO, direct listing, whatever. If you know that you don't have, or if you're not sure if you have um, public ready discipline on your governance, I would just recommend National Association of Corporate Directors is a really great place to start. Reach out to them, join, get into a group. They have online courses you can take. They'll even do specific classes just for your squad if you wanted them to. But you've got to, got to have everything dialed in on governance for your leadership. Have your board public ready. And Christine, I mean, tell me this: like, if a company came to you and you asked them about governance and about their board, and they told you, actually, yeah, 3 of our IDs are members of the National Association of Corporate Directors. And they've got certifications from them on governance, et cetera, et cetera. Would that be something to where you would be like, okay? I
I
mean,
would like that because it shows that they've put thought into this. They're not just saying, okay, we have an existing team and we're just going to keep them through. We don't need to add, we don't need to change. It shows that they've taken a critical look at what they have and said, how can we fill in the gaps and how can we present better to the public markets? So, doing things like that just really shows that they're being thoughtful about this process.
yeah. And I will tell you this, whenever you're dealing with a SPAC team, if you already have that locked in with your squad, whenever you even come to the table with a SPAC team, they're going to be like, how you doing? I mean, it's gonna be like a little bit of extra. They're gonna be
Yeah.
like, these guys know what's up. They're
Hmm.
disciplined. They're
Hmm.
really ready. They want this. So I agree with you 100%. So any other red flags before we jump onto the next thing I've got? Because you talked about valuation, and I want to get to that. But if there's any other key red flags that when they do an inventory of themselves, they need to be thoughtful of.
Yeah, I mean, I think really you just need to be critically assessing what you have already done internally and make sure that you've checked the boxes so that when you come to the public markets, you don't need me to tell you what you're missing. You've already flagged it yourself.
Got it. Now, let me ask you this. Whenever somebody like you comes to the table, and I'm going to use an analogy that most of us are familiar with.
Okay.
If I go to buy a house, like actually, if I was going to sell my house, I
Mhm,
already just assume that even if my house is like brand spanking new, the
mhm,
inspector that the buyer has, they're going to find something because they just
mhm.
have to. Like they're
Yeah.
being paid to find something wrong with it. And you, as a portfolio manager, like, I mean, maybe that's kind of like how they're going to think of you is that, man, she's being paid to find something wrong with us. Is it that same kind of thinking that's there to where they should say and not take it too hard because you're like that's your job is to find everything that's wrong with them?
I mean,
Or
I wouldn't say it's to find everything that's wrong with someone. It's kind of like approaching it from the negative. I do want to make sure that, because anything that I suggest or I recommend as an investment, I'm going and I'm bringing to my teammates and saying, I want to do this, I want to give more money to this, which means now it's on me. So if there are things that are not great about the company, I want to address them early and I want to address them honestly. And, there are times where I'm looking at a company and just saying, like, this won't fit in our portfolio,
Yeah.
but let me help you by telling you the things that other people are going to flag. So, I mean, I wouldn't say that I'm just looking for all the things that are wrong. I'm also looking for all the things that are right. But, if there are glaring omissions or big things that are wrong or your projections are just crazy, then yeah, I will bring that up with
I'm
you.
just I'm envisioning you pulling out a Jerry Maguire. Help me help you.
Yes,
Okay, so let's
exactly.
talk let's talk valuation real fast.
Hmm.
Because you mentioned
Hmm.
you're like, I see valuations that'll flip like five
Yeah,
times. So
yeah.
okay, let's talk like how important is valuation whenever you make your when you ink your initial deal?
I mean, it's critically important. Um, I understand that there's a fine balance for the, target team between giving their company away, but also having a realistic valuation that allows for some room for growth.
Right?
I mean, you don't want to be pricing at the absolute peak of your potential valuation because that's just not going to be a well-performing stock. We want to see some ability to improve in the stock price performance. So, that needs to be taken into account. Like, I really think that a strong SPAC sponsor team that you're working with will really help guide you in the valuation. Hopefully they have some, institutional or M&A experience and they can help lead you towards a realistic valuation. It always helps when there's public comps, so that us on the institutional side can say, like, okay, where does this, what can I benchmark this against? And realistically, you need to, say, here's the public comp and have a little bit of a discount just so that we have that, the room for improvement. It's just, don't price at the absolute peak. If you're looking at your valuation range between, X and Y, like, pick something in the middle. Like, it doesn't need to
It's so
be so
so
high.
this is something I was actually thinking about like probably 3 days ago.
Hmm.
Like I had somebody, they were talking to me and they were like, "Oh, we have a fiduciary duty to our shareholders." And I'm like, "Yeah, you do, but not just in this moment. Are
Yeah.
you going to be a short-sighted leader, or are you going to be a leader who actually is operating from a position of vision and where you want your shareholders to be in a year from now?"
Hmm.
Because if you want your shares to be in the toilet in a year from now, get primo right now.
Hmm.
But if you get primo right now, your shareholders are going to be punished a year down the road, and they may turn around and try to punish you.
I mean, really, if you're trying to price at the absolute peak on your IPO, then what you're asking is for your existing shareholders to sell. And if you want to flip everybody, I mean, it's not a great strategy. I think that it's much better to say, our current holders, they want to hold through. They're looking at this in 5 years and 10 years, and they see potential and growth and value in what's going to happen. But I mean, if you're pricing it for absolute peak on IPO, I think that's quite short-sighted.
Dude, okay. The way that you just phrased that for me, everyone, I don't care who you are, like listen to that one more time. If you're pricing at absolute peak, you're pricing for your inside shareholders to sell.
Mhm.
You're basically telling them now's your moment to exit.
Exactly. Cash out.
Holy crap, I love
Wow.
that. I love that. Instead of saying, hey, I know that you could leave right now, but if you do, you're selling yourself short because we're about to go somewhere.
Exactly.
Well,
Exactly. If you believe in your story, then you're pricing in a little bit of goodwill and you're going to see share price expansion throughout the year. And that's what everybody really ultimately wants.
I love that. Okay, so let's talk real fast on because we talked about valuation from the standpoint of
Mhm.
like where you set it right up front. Talk to me about why it matters that it's going to bounce around.
I mean, realistically, we see this more in DSPACs than we do in other types of investors or investments, but there will be, you know, movement as they speak to institutional investors and they start getting more and more feedback and they start hearing people say, I might be involved in your pipe, but not at this valuation. Like, this is your chance to start flipping your shareholder base from the SPAC shareholders to long-term institutional holders. And they're only going to do that at what they deem is the right price, which might mean that your valuation shifts as you continue throughout the process. So, this is your opportunity. You do want to take it. You want to start seeing people fundamentally believe your story and transition into more long-term shareholders and have that base.
I love that. Okay. So real fast,
Hmm.
I want to talk about sponsor teams. A minute ago, we kind of chatted about the idea of your sponsor team should be able to add value, and help you do certain things.
Hmm.
Um, and choosing the sponsor team because I I feel like the average company is going to talk to probably like four different teams. I feel like,
Yes.
like when they talk to four different teams along the way, um, from an investor perspective, like what should they be looking for as that is going to connect back over to you as the investor to where
Yeah.
you can say, I like it.
So, when I'm speaking to sponsor teams, they tell me, I have this experience. I've been a CPG exec for 50 years, and I'm going to go out there and find the next big product. So I never really like it when they then come back and they're like, I found a quantum company. Like, okay, like I was excited by the unique experience that you had that you could then bring to your target team. So I do think that targets are, they should be critical in looking at what experience these sponsor teams have and how are they going to be able to benefit you. Are they getting excited by you because you're in a buzzy industry, or are they excited by you because they really can understand your story and your value? Are they kind of vibing with what you're bringing out there as opposed to just saying, like, okay, everybody's doing DAT, so I want to do a DAT, so let's just jump on that bandwagon. So I think that's a really important thing for target teams to be looking at. I also think that, don't be swayed by somebody that comes to you and says, like, I've done 10 SPACs. Like, who cares about the SPAC IPO? Look at what happened on the back end of it. How many deals did they actually close and how have they performed since then? Have they been able to help flip the base from the SPAC sponsor or the SPAC investors to institutional long-term holders? I think that's really critical and it needs to be really looked at before you commit to working with a sponsor team.
So it's so funny you say that. I like a lot of our listeners probably don't know. I'm actually leading a SPAC team myself. And it's so funny because when I was interviewing for who we were gonna have as our CEO recently, I had one guy that I spoke with who basically wanted to command a monster premium for him stepping in and touting his experience and in the SPAC ecosystem and everything like that. And it was interesting because when I went and looked at the deals that he had put together, I think if I remember correctly, like one of them liquidated and the other one was trading for like $2, and that was
Mm,
after some reverse splits.
yeah.
And I was just like, yeah, no, no, you're no.
Yeah.
You don't get to you don't get to have a like I mean in baseball if you're hitting 50% and then you still never make it back to home plate. It's like you're winning in some regards, but not really in others. But this isn't even
Yeah.
baseball. So
I
I
mean,
don't know.
some sponsor teams will have these kind of less successful DSPAC stories that have happened, but they're able to, really explain what happened and what their learnings were and how they can, progress going forward. And, I think that that's valuable or it can be valuable information. It
Lessons
can be
learned.
helpful. I'm not saying if you look at a SPAC team and they've, maybe got an unperfect track record to write them off, but it's worth incorporating into your conversation and say, what happened here, and you know, do you view it as just something that was completely outside your control, or do you say like, this happened and this is what we can do going forward so that we can fix these problems in the next SPAC. So, I mean, it's got to be a conversation. It's like a marriage, like pick the right partner. They're not going to be perfect. Nobody's perfect, but do
Yeah.
you mesh well? Do you have the synergies that work together? Do you feel like this can be a long-term relationship for you? Because it really should be.
It all starts with the teams. Yeah, it all
Mhm.
starts with people. So what
Mhm.
else? And as an investor, what else are you looking at in the SPAC sponsor that they bring along?
I mean, they really need to help you bridge the gap between the SPAC investors and the long-term investors. So they should be putting you in front of, institutional investors that have the potential to be turning into pipe investors or,
Yeah.
private placement investors. If they are not helping you get there, I think that's going to be quite tricky. Hopefully they have, some sort of connection that will help you get there. But really, it's going to come down to, do they believe in your story? Do they believe in you? Are they excited about your company specifically as opposed to just getting the SPAC deal done? Like we all know that there's kind of an unequal payout for the SPAC sponsors. They're incentivized to get a deal done, but the really good SPAC teams want to get a good deal done. So they want to partner with somebody that they really believe in. And I think that that's important that you feel that when you're talking to them.
So let's uh let's kind of talk real quick about you don't laugh. This is one of those things where you talk about like really feeling it. Um
Mhm.
sometimes feelings are good and sometimes they feel like a bee sting. And And yeah. So
Uh-huh.
if you don't know, Christine, if for all of you listening, is actually a beekeeper as a
Yes.
hobby. So
Yes.
could you please unpack that for me? Like, I'm just envisioning you with that big like
Yeah.
outfit with like the
Yes.
big net, like
Correct.
almost alien looking hat on
Mhm.
your head and a big smoker gun. So
100%.
100%.
That's
Talk to
accurate.
me about how you ended up being a beekeeper.
You know what? So, SPACs, financial markets, it's all very fast paced. It can be intense, it can be stressful. I like my hobbies to force me to be slow. If you are not slow when you are around bees, if you are being stressed and aggressive, then you get an immediate feedback of being stung. So, you got to be chill, you got to be detail oriented. And, I don't know, I'm the kind of person that kind of dives deep into things. So I like bees. I started speaking to a couple of, beekeepers at farmers markets and stuff and started, I was mentoring with a beekeeper and just kept going. And now I have my own hive. So yeah, it's a more niche hobby, but I do enjoy it. And, bees are important to the world ecosystem.
Yeah.
So helping out there.
So do you tend to send little Christmas gifts out to people of honeycomb and stuff?
So I have in the past when I was mentoring, my hive is very young right now, and you can't
Okay.
actually take the honey stores yet, or else they will not live through the winter. And I am in Canada. Our winters can be a little bit intense, so we gotta help them live through the year. But yes, next year everybody will be getting honey.
Nice. I like it. Okay. Sorry, I know I kind of like totally derailed it there, but it was like I had that moment and I was thinking about it. I'm like, I gotta ask about this. So by the way, so I mean, where do you keep all of these bees? Is it like at a neighbor's house that you don't like, or what?
Tell you, bees will not bother you if they are in your backyard. You can have a backyard hive and they are unlikely to bother you. So, let's get rid of that misconception. But they are my parents have a house out in the suburbs. I live in the city of Toronto. They're out in the burbs. So I go out there and I keep them there. It can be tricky to keep bees. There's a lot of rooftop hives in the city, but keeping them down on the ground can be tough because you can't really go within 6 feet of the hive and everybody's yards are very small in the city, so that kind of
Fair enough.
impedes
I'm
it. So,
with you. I'm with you. Okay. So let's get back into talking about this for just a few more minutes. So let me ask you this. Um, obviously you don't always come in early in the process, right? Like there's a lot of times to where you're stepping in at the DSPAC, you're stepping in at, like just ahead of the BCA announcement, things like.
Mhm.
So, what is something that the management team could be doing during the transaction process, maybe even before they know who you are,
Yeah.
to where they could be building credibility and garnering street cred, if you will, with
Mhm.
investors and
Yeah.
kind of the maybe like you guys as an individual or the institutional investors more broadly?
Yeah. I would say be transparent and be consistent. I think that a place where management teams trip themselves up is thinking that they need to present perfection to investors and gloss over areas where there might be some risk or some challenges going forward. You know, as an investor, I understand that there might be challenges or risks or things, and I'm not going to immediately write you off because of that. I just need to know what they are so that I can incorporate them into my analysis. So the
Mhm.
worst thing is when, I'm talking to somebody, I say, like, okay, well, what about permitting for this thing? And they're like, let's not talk about that. Let's move on. And they try to like kind of jump away from something that I know is going to be an issue for them. So, that always makes me a little bit nervous because I'm like, did they not recognize that it's an issue? Are they not prepared to answer this question? Or do they think that we're just like not going to pay attention to these things? So, I mean, be transparent, be consistent in what you're saying, you know, approach this with integrity and honesty, and investors are going to respond very well to that. You don't need to be perfect, but you do need to be honest.
I think that's so valuable and sadly not something common enough in capital markets is just the honesty standpoint. Like,
Mhm.
it's funny, I used to live in California and I lived in LA for a while and I lived in San Diego for a while, and I realized that when I kind of took inventory, like people that live in San Diego don't like people that live in LA typically. And it's interesting. They really don't, because they will tell you, and it's this idea that people that live in San Diego, they're just very chill, very laid back. Like you'll see a guy get out of his Ferrari with a pair of jeans that he's had for 30 years, that he actually just cut the jeans off and just turned it into a pair of shorts, and he's just like wearing like a Hawaiian shirt kind of thing, like just super chill. You don't see people do that in LA, right? But it's this mindset of people just being comfortable with who they are and where they are. They have a
Mm,
vision, but like they're just going to work to get there. Whereas in
yeah.
LA, nobody tells you about who they are. They tell you about who they're gonna be.
Mm,
And so it's like they want to be perceived as what they're gonna be without really acknowledging that they're like that, even though they might be wearing a Gucci t-shirt and that's $700. What you don't know is they didn't park valet. They parked around the corner in the $10 parking lot, and they're gonna go get into their 1995 Corolla, or something like that. It's like, but they're trying to act baller, drinking $30 drinks at the bar, or whatever. Like, it's just not being honest about where they are in life to get where they
yeah.
need to be. So I
Yeah.
I get that 100%. And for all of you who just fit that mold of somebody in LA, I'm sorry. It gets better. Just know that. But okay, so let's talk about this one final thing, and then we're gonna wrap stuff. So what separates DSPACs that actually get institutional based, because not all of them do,
Mm,
from those that struggle after closing? And real
yeah.
quick, before you answer that, I feel like maybe I should kind of give some preface to our audience. If you're a private company looking to go public, you may not know what I mean by this. Um, Redemptions right now are hovering just over 80%, I believe, on average. So if you have for a frame of reference, if you have a $200 million SPAC, then that means that you're going to have 160 million of that 200 million disappear out of the trust, and it's never going to make its way to you. Then on top of that, you might have the most likely you have investment bankers that have their hand out on the backside. There's
Mm,
fees that are going to be out there on the backside, and it may be anywhere between another $3 to $8 million that disappears out of that. So now your $200 million is down to like 32 million. And you're like, what the heck? But that's where Christine, Periscope, other institutional investors come in and they help to backstop the deal, bolster it. And what it does is it gives validity to your company by saying to the market that institutional investors like what they're seeing in this company and in this deal. So you could have comfort in putting your money into this stock as well. So, with that and frame, I'm going to state it again, Christine. What separates DSPACs that get institutional base on the backside of the deal from those that struggle after closing?
Yeah, I mean, it's a tricky situation. I've seen what I consider to be great companies go public via SPAC and then just kind of become orphans. There's no institutional coverage, there's no float, they just kind of languish. And I find that to be very unfortunate. So you really have to use that period of time between the deal announcement and when it actually, the vote and it closes to like really be marketing yourself to the institutional base. Like this is your chance to get that pipe in place. If you're pitching yourself over and over again to institutional investors and you're either not getting any good feedback or not getting feedback at all, I mean, I think that that's a signal and you need to reassess. And, it's up to you what you do with that information, but it is a sign that, people are not getting as excited about this as they need to be. The sponsor team should be really helping you with this. They should be, putting you in front of people. They should be helping you, present yourself in the best light. But, you really need to be hustling pretty hard. And then once you go public, once you are actually out there, you need to keep that up. Like it's not done now. You are still out there. I actually went to a pretty small conference yesterday. There was maybe 50 people there. And there was, a DSPAC CEO there presenting. And it's like he went public a little while ago. The stock is doing quite well. He didn't need to be there, but he is there because he knows, these types of things are worth my time. I need to put my face in front of investors over and over and over again so that they remember me, remember the story, and stay interested and stay invested. So, it's the hustle just starts at the DSPAC. It doesn't end then. You need to keep going, you need to keep pushing, you need to keep getting people excited by you over and over again.
Jesse Bush, I had him on here from iBanker um,
Hmm.
several months ago, and he said something really good that stuck with me. He said, if you're going to take public money, you've got to be public facing. Don't
Hmm.
think that you're going to take public cash and then hide, and then you're not going to end up finding yourself in a nightmare story.
Yeah.
Like it's one of those deals to where if you want public cash, you have to stay in front of the crowd.
Yeah. Yeah,
So
I mean that's
love
it's
that.
part of the gig. And if the CEO is not able to do it, then make sure that you have somebody in your management team that is going to be really good at that and is going to get out there. The other thing that I think that people really remember is 2020, 2021, everybody's presenting with their little hockey stick saying like this is what my growth is going to look like. They don't meet those projections, they don't meet those estimates, confidence gets lost. So, be realistic in what you're presenting to the public, to institutional investors. Like, I don't need to see exponential growth. I need to see realistic projections that make sense and that you're actually going to hit. Like, you now have accountability to your investors. So make sure that what you're putting out there is achievable.
And let me ask, because I know my philosophy on this. I have a philosophy of you need to be giving deliverables quarterly and and to say, hey, over the next 3 months, we're gonna hit this metric, this benchmark. It doesn't have to be astronomical, blow my hair off my head if I had any kind of thing. But but it needs to be something showing me that you're trending towards your vision and that to where you can execute. And so I feel that every 3 months it's, hey, this is where we're gonna go over the course of the next 3 months. 3 months later, hey guys, we told you 3 months ago we were gonna do this. we delivered. And now I want to
Mhm.
let you know that in 3 months from now, this is what you can expect from my company. And then you come back 3 months later, we delivered. Now here's what you can expect.
Exactly.
Like, I mean, just you talk about consistency,
Mhm.
transparency, and then on a rare occasion, hey guys, we told you 3 months ago that we were going to deliver, but now this whole Iran conflict thing, because of that right there, supply chain, blah, 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 we have a ship stuck in the Strait of Hormuz. Like, we can't get our product. So, because of that, we didn't deliver, like, and so, but whenever we're able to cure this deficiency, we're working hard to find out a different place to where we can offload something else in a different harbor, and we're going to get it by land if we have to. We're fighting to find a different way forward. Like, do you agree with that type of mindset for them to approach, or is there something that's more mind blowing from you?
No, I think that you need to be giving, consistent benchmarks and goals and targets that you will then be hitting. And, that period of time where you're marketing your DSPAC and you're meeting with the investors, that's a good time to say, like, this is what I'm going to look like 3 months out. This is what I'm going to look like 6 months out. These are the things that I'm working towards. This is how I'm going to get there. And then in 3 months, come back and say, this is what I've done. This is what we're doing for the next 3 months. Make sure that you're giving a steady flow of information to your investors and keeping it up, keeping as you mentioned, hit the targets as best you can. There's always going to be things that are impacting that maybe are out of your control. Investors understand that, but try to be realistic in what you're saying, and then you're just going to build an atmosphere of credibility, and the more credible you are, the more investors are going to trust you and they're going to want to give you their money.
True story. True story.
Mhm.
Okay. Anything that you have as a closing point, wise sage, axiom, golden nugget, whatever you want to call it, for our listeners of these private companies looking at going public through a D-SPAC?
I think just once you're, out there marketing your company, you know, to your point, you need to be confident, you need to have a bit of an ego, but also be receptive to the feedback, accept that, the investors want you to succeed. They want to give you money that is going to grow. So, be receptive to the feedback and then go forward with it. And I think that most of the DSPAC targets are really interesting companies that can go far. So, you've got to take that feedback and run with it.
I love it. Everybody, once again, Christine, portfolio manager, dual portfolio manager, but the only one really wearing the heels in the office. And so we've got her from Periscope Capital. And so you will likely run across her if you hang out in this ecosystem. Make sure you say hi, give her a fair shake, and make sure that you take anything that she says as really good counsel, because I promise you it is. Christine, thanks so much for being on here today. You're remarkable.
Oh, thank you so much. This is fun.
Absolutely. Hey, blessings. All the best. Everybody, this is Chaz, your host of the DSPAC podcast, myself and Churchwell Insurance Agency. Thank you for listening.